Good morning, everybody. Hope everyone's having a good morning so far. My name is Jayson Bernal. I'm one of the two assistant loan production officers out of the Phoenix regional office, and I work for the regional loan center in Phoenix and loan guarantee program. And today we're going to be just discussing a broad overview of what the loan guarantee program is and how VA home loans, eligibility, qualifications, etc. I'm joined by my colleague, Mary Ann Mills, and we're going to go ahead and start this presentation. Any questions or answers, we will be happy to address those at the very end. And so without further ado, let's go ahead and get started. Next slide, please. Thank you. So loan guarantee service, what exactly is it? Well, the mission is to maximize opportunities for veterans and service members to obtain, retain, adapt homes by providing a viable and fiscally responsible benefit in recognition of their service to our nation. And the vision, to empower veterans with the information and access to innovative products and services by providing a veteran-focused experience or veteran-centric, strengthening our partnerships, driving continuous performance improvements, and never forgetting who we serve. Next slide, please. Okay, kind of a synopsis of what the program entails. Here a moment. So the VA Guaranteed Home Loan Program helps veterans and their family, service members, and eligible reservists become homeowners to help buy, repair, retain, adapt homes, as mentioned earlier. The VA home loans are provided by private lenders such as banks and mortgage companies. The VA guarantees a portion of the loans, enabling to lenders to provide veterans and service members with more favorable financing terms, including a no down payment or mortgage insurance premiums. VA also administers direct loans to Native American veterans on tribal lands due to the lack of traditional financing in these areas. And this is one of our, probably one of our other better programs too as well. They're both, phenomenal. But this one, the NADL program in particular, is something we, is particularly this regional office, we do 80% of all those types of loans conducted nationwide. Who is this for? The home loan programs are available to veterans, their families, service members, and eligible National Guard and Reserve members. Under the separate special adaptive housing program that we also have, veterans with certain service-connected disabilities may be entitled to grant funds to help adapt their homes and enable or maintain independence. Next slide, please. All right, eligibility requirements for home loan guarantee. This is basically the golden ticket as to how the program functions. The applicant must qualify for the loan from the lender, and the VA guarantees a portion of that loan on the back end, federally insuring that loan. Service requirements vary based on when the applicant served, and generally the applicant criteria is the following: 24 continuous months of active duty, or a full period of at least 90 days, called under active duty, typically Title 10 is what it's referred to. National Guard and Reservists have a little bit different qualification methods. Members have either met the full period of at least 90 days under that Title 10, or now with the new circular that came out, we have 7105, which is Title 32 orders as well, and those have specific qualifications. But both Title 32 and Title 10 can qualify. And if they're called or ordered to active duty, or have completed at least 6 years of service in the Reserve National Guard and receive an honorable discharge. Everything else, very much like the fire triangle, this is just one of those things, you need all of these elements to be eligible. The length of service is also a requirement. So length of service requirements do not apply to veterans discharged to a service-connected disability. So if they are discharged from the service as a result of a disability, that's an exemption to where they need only serve 1 day. There is no minimum length of service requirement. Next slide, please. All right. VA offers a variety of home loan guarantee programs for active duty service members, veterans, National Guard, and Reserve members. Of the particular loan products that we offer, these are the biggest ones. Obviously, to purchase a home, to help an individual purchase a home at a competitive interest rate, often without requiring a down payment or private mortgage insurance. One of the I would say the biggest, most used program that we are, product that we have is the interest rate reduction refinance, or often referred to as EARL, or Streamlined Refinance. And this allows, just a rate and term, and helps homeowners obtain a lower interest rate by refinancing his or her existing VA loan. Another option is the cash out refinance. This allows homeowners to borrow against available home equity. And this is pretty popular in most sectors. There are over 1,200 lenders in this program, with the top 10 lenders making up 39% of all the loan volume. And as fiscal year 2020, we conducted 2.1 million requests were made online for certificates of eligibility, and with nearly 1.6 million receiving automatic issuance, this meaning that the lenders had applied through the systems without having it to be approved by the VA internally, which is about a 75% success rate. So that's very good, or 77%. I'm sorry, I apologize. Different numbers there. All right, next slide, please. All right, this is just a kind of a representation of the loan volume. As we can see here, we've, as far as our purchases, EARLs, our cash out refinances, and our totals, we have some staggering numbers. And the change in the volume, as you can see, between fiscal year 2019 and 20 is drastic. And I would say it's even going to be more drastic considering the market trends currently going into fiscal year 21. Next slide, please. All right, attractiveness to borrowers and lenders. The VA remains the most attractive mortgage product for veterans in the industry due to its no down payment feature and default assistance. VA provides guarantee of at least 25% of most loans to compensate lenders for no down payment. VA servicers receive financial incentives for providing various foreclosure and avoidance measures. And VA's electronic interface system allows lenders to go online, obtain certificates of eligibility for most veterans, as well as electronic delivery of loan guarantee confirmation. All of these things we've been really working internally to try and streamline the process and make it as easy as possible for both the lending institution and veterans alike. All right, and just kind of recapping on the funding fee portion here. The VA funding fee is a one-time payment that veteran service members or survivor pays on VA guaranteed or VA direct home loans. This fee helps to lower the cost of the loan for the borrower, since the VA home loan program doesn't require down payments or monthly mortgage insurance. To be exempt from the funding fee, one must meet one of the following criteria. Receiving VA compensation for service-connected disability would make you otherwise exempt from the funding fee. Eligible to receive VA compensation for a service-connected disability, but receiving retirement or active duty pay instead. This is something that is typically based on the discharge and how those things are working when they're separating. But that's a whole intricate process that we're able to confirm with the processes to determine whether they are going to be in receipt of compensation, which can also make them otherwise exempt. Surviving spouse of a veteran who died in service or from a service-connected disability, or who was totally disabled and receiving dependency indemnity compensation. We offer two types of benefits for surviving spouses: survivor's death pension and dependency indemnity compensation. The dependency indemnity compensation, or DIC is what it's often referred to, is the only one that is eligible in this in this context. Another exemption would be a service member with a proposed or memorandum rating. This kind of coincides with the whole retirement aspect of it. Before the loan closing date, stating eligibility to get compensation because of pre-discharge claim. Or a service member on active duty who before or on the loan closing date provides evidence of having received the Purple Heart. And this was all part of the new Blue Water Navy policy enacted went into place. So, and on that note, I'm going to go ahead and hand this off to Mary Ann, and she'll go ahead and close us out with the remaining.
Hi, everyone. Can you see me?
Yes. I can see.
Okay. So good morning, everyone. My name is Mary Ann Mills, and I'm also one of the assistant loan production officers at the VA Regional Loan Center. I'm going to go ahead and jump right in. The VA Specially Adapted Housing is a grant program that is available to our severely disabled veterans. This is to help them live independently and then provide a barrier-free environment. The purpose of the grant program is also to give them a better quality of life. They can use the grant program to purchase or construct a home, or adapt or modify an existing home to meet their special needs. And what's great about the program is that this can be used throughout the world. You know, veterans that are residing in outside of the continental US. And the most numerous grant program that we approve are for veterans that are residing in the Philippines and Germany. So some of the examples are to lower the kitchen countertops, to create a ramp for somebody who's using a wheelchair, or to widen the doorway to allow for better accessibility. The Housing Improvement Act of 2019 provided changes to the program, which included eligibility for blind veterans and increased the number of maximum awarded grants. Used to be 30, now is increased to 6 times per veteran. It also increased the number of approved applicants for fiscal year from 30 to 120. So it's really a great program for our veterans to help them improve their quality of life. Next slide. So these are the 3 types of VA housing grants that fall under SAH. For the Specially Adapted Housing Grant, the maximum grant amount is $100,896. And this is to help veterans live more independently in a barrier-free environment. And for the Special Housing Adaptation Grant, this is to help veterans modify or adapt or purchase a housing unit to help them live more independently. And the maximum grant amount for the SHA is $20,215. There is also a third grant, which is a temporary residence adaptation grant. So when a veteran is eligible for the SAH and SHA, then they can use the temporary grant to modify a home if they're temporarily staying with in a home owned by a family member. So for the SHA, temporary grant is $40,437. That's the maximum amount. And for the SHA, temporary grant is $7,256. So as I stated, the usage went up from 3 to 6 times, totaling the maximum grant amount. And the amounts that you see up here, they are adjusted annually based on the Turner Construction Index. And it's adjusted every fiscal year, October 1st. Next slide. Now moving on to loan management. This is an area in loan guarantee that is responsible for helping veterans who are in some kind of a temporary financial hardship. The purpose there is to help these veteran borrowers avoid foreclosure, and also reduce the risk of homelessness. We're gonna kind of talk about bragging points here for the VA since 2019, and the reason why we picked that date is that when we implemented the VA loan electronic reporting interface, so it gave us a better reporting metrics. So starting that date, we assisted 1.1 million borrowers in default avoid foreclosure. And this is a huge thing for us because every loan that we prevent from going into foreclosure or liquidation, that's about a $28,000 saving per loan. So if you equate that, that's about 30.6 billion potential foreclosure claim savings to the VA as well as to the taxpayers. Last fiscal year, 2020, VA made 689,000 outreach contacts to veterans and servicers. And the efforts, as a result, we were able to help 119,000 veterans retain their home or avoided foreclosure. And again, that's a huge savings right there, 3.4 billion in potential foreclosure claim savings. So some of you probably heard about the DRR, but it stands for the default resolution rate, and that's kind of our, our metrics in helping veterans who are in some kind of, financial hardship. Since the implementation of the metrics, the percentage of the DRR increased. As you can see from fiscal year 2009, we started off at 71.5. So the higher the number, that basically equates to, our success rate. And last fiscal year, we reported 93.81%. So that's pretty good. The highlights of VA default resolution strategies is that VA is maintaining one of the lowest delinquency rates in the industry at 7.69% over the past 49 quarters. And VA has the second lowest foreclosure inventory at 0.66% and the second lowest seriously delinquent rate at 3.98%. Next slide, please. Okay. So over the years, the loan guarantee service role, we kind of switch over to, mostly on the oversight responsibilities to ensure that we maintain the delivery of loan guarantee benefits to our veterans in compliance with, with our policies, guidance, and regulations. So we delegated the day-to-day operations to our program participants, and our partners, the mortgage lenders, servicers, and appraisers. We do have a VA monitoring unit that do conduct site visits or inspections of lenders and servicers. We also have our systems where we, for the VA funding fee system, and also the WebLGY, which is VA's system of record of all VA guaranteed loans. And on the appraisal side, we have the VA automated management service and the VA automated valuation model. We also conduct random reviews of individual cases, such as the field and desk reviews when on the construction side, and then the full file reviews on the origination side. And as far as the servicing, we do have dedicated loan technicians that are assigned to the loan when the servicer reports that loan in our VA loan electronic reporting interface. It's a nightly update from the servicer system to Valerie. So if a borrower needs intervention from VA or assistance from VA in interacting with their servicers, then they do have a dedicated loan technician that will assist them in that regard. Next slide. So during the COVID-19 pandemic, we're actively involved with our industry partners. on the servicing side, there is an initial forbearance for borrowers who are encountering some kind of financial hardship because of the pandemic. So we have the initial 180 days of forbearance where they don't have to make their payments and late fees are not assessed. So the borrower can request it. We don't require documentation from the borrower. If they can just reach out to us or their servicer and say that, hey, I need a little bit of time here because I'm having some kind of hardship in making my mortgage payments. And that can also be extended at the borrower's request for an additional period of 180 days. And as far as the foreclosure moratorium, VA has extended that until June 30th of 2021. And I'm pretty sure that's going to be extended later on too. So the guidance that we put out there, we working with our program participants, like the loan origination side, loss mitigation, and the moratorium, and the forbearance of mortgage payments. There is also some information that you can check out from our VA Home Loan Guarantee website, and I'm going to provide that later on. I think it's the last slide. And we are also working with other federal agencies through the Unified Housing Resources for COVID to provide comprehensive resources for our veteran borrowers. Next slide. Next slide, please. Okay. So this is just kind of a summary of, our highlights and accomplishments. Again, we guaranteed about 1.2 million loans in fiscal year 2020, and that equates to about, if we look at a dollar amount, that's 375 billion. And which is pretty interesting because if you compare that to the highest volume in 2017 of 740,000 loans, that's really a big jump. So we broke the record for the purchase loan volume, having guaranteed over 428, worth 130,000 or 130 billion. So since VA does not require our mortgage insurance, that's really a huge savings for our homeowners, especially, with their monthly payments. So in fiscal year 2020, VA saved veterans $73 billion over the life of their loans. So if you're looking at about $300 PMI payment monthly, that's really a huge savings for our veterans. This is just kind of a recap, I think, on the previous slides. In fiscal year 2020, VA saved approximately 119 borrowers from foreclosure. Again, that's 7.4 billion savings to our taxpayers in potential foreclosure claim payments. Also, another thing that we did to a systematic change with the Value Loan electronic reporting interface is that for better tracking when it comes to loan servicing activities related to the pandemic, we added a COVID indicator for loans that were impacted by the national emergency. And on the construction and valuation side, we were awarded the contract to basically support valuation activities for homes purchased through the VA home loan program. And that did result in, helping or improving the borrower's home buying experience by increasing efficiency of appraisal scheduling, tracking, and completion. Next slide. Well, this is really something interesting here. Did you guys know that the VA home loan program started in 1944? So 77 years later, VA remains the largest down payment mortgage program in the nation. And many of the earliest VA guaranteed loans were not for residential homes. They were for farming equipment and business inventory, including taxi cabs and delivery trucks. This is part of the readjustment bill signed in 1944. So when the program began, VA had to do the underwriting internally and also approving all VA guaranteed loans. We had several offices nationwide, but then, we got consolidated into 8 regional loan centers, including our satellite office in Honolulu, Hawaii. So now we've delegated a lot of that, activities or responsibilities to our mortgage lenders. And the first VA guaranteed home loan was obtained by Captain Myers for a home in Kentucky or Kennedy Street in Washington, D.C., which is a few miles from the U.S. Capitol building. And the VA has guaranteed 2.8 million loans in California, the most of any state. And in fiscal year 2020, VA guaranteed its 25th million home loans since 1944. So this nears a population of all the states combined of Arizona, Colorado, Idaho, Montana, Nevada, New Mexico, and Utah. So that's pretty amazing. In fiscal year 2020, approximately 93% of all VA guaranteed purchase loans are made with no down payment required. And the era of service with the largest percentage of VA home loans is represented by our Gulf War era veterans. We have significantly a lower default rate, despite the fact that, we don't require a minimum credit score, down payment, or monthly mortgage insurance premium. And the most expensive loan VA has guaranteed is a $9 million home loan in Malibu, California. So those are interesting facts that, thought we want to share with you. Next slide. Next slide. Okay. So on the front end, the loan processing, eligibility determination, and the loan servicing, that is done at a national level. We operate with 8 regional loan centers and 1 satellite office. But when it comes to our valuation and the specially adapted housing activities, those are still done by jurisdiction. So if a veteran that's applying for an SAH grant for a home located in Nevada will have to be working with our SAH staff in Phoenix, the Phoenix Regional Loan Center. For somebody who's located in Kansas, we'll have to work with our St. Paul Regional Loan Center. And also the Honolulu satellite office that falls under Phoenix, and they covered American Samoa, Hawaii, Guam, and the Northern Mariana Islands. Next slide, please. This is just additional information for you guys, and I apologize. The email, that is an incorrect email address that's been updated. We just got the notification today. So the correct email is 345lp@va.gov. Okay, so let me repeat that again, 345lp@va.gov. So you can reach out to us also toll free. Thank you. 877-827-3702. And you can check out our website at benefits.va.gov /home loans. And I think that concludes our presentation. Thank you everyone for your time, and I hope you have a great day.
Jayson, we're going to jump back in and do some questions, or are we going to end the meeting at this time? Or Marianne?
I think we have time for questions.
We do have time for questions.
Yeah, we do have time for questions. So
we also have a poll. Did you want to use the poll or not at some point?
Sure, we can certainly do that. I think we submitted 2 questions, so yeah.
Okay, I'll start the poll now for you. Okay, here we
Okay.
go. Jason, Marianne, let me know when you want me to end it, okay?
I think we can go ahead and end it right there.
Yeah.
Well, that's pretty interesting. Have you used your VA home loan guarantee benefit? 91% said yes. 2% said no. Did you use your benefit to purchase a home loan or refinance your existing VA home loan? Purchase is rather high, 95%, and 1% refinance. I think that's a really interesting dynamic there in terms of like how the program's being used. I've seen a lot of cash out refinances tending to be because of the market currently, but to see the purchases, absolutely, that's really high. Well, that's good. In addition to the poll, I wanted to address a question that came up during in the side chat over here. I wasn't able to send it to everybody, but an individual, I believe, asked, you know, how in the world did someone get a $9 million loan? And that there was the impression that there was a cap on the loan amounts. This is one of those questions that's factually true, technically false. It is factually true. There's a loan cap. The nationwide standard is 548. That's across the board. However, there are county loan limits that, given the demand and the cost of living associated with those areas, in addition to the median income, they have adjusted the loan amounts to a higher threshold. So premium real estate, such as in Hawaii, in certain areas of California, Washington, New York, they made the adjustments so that, you know, an individual or a veteran should not be, you know, penalized or have less buying power, purchase power, simply based on those cost of living adjustments. So $9 million, that is rather excessive. Typically, in these particular situations, a couple things could occur. This could be, because this question asks a lot of moving parts. Not only is it the loan limit, but it also has to do with how many people are on the loan. So there could be multiple veterans who are splitting the entitlement of the max county loan limit in order to sustain that property and be able to get a $9 billion, you know, residence. In many cases, a lot of the larger loans that I have seen have been multiple veteran parties, husband and wife who are both veterans, or two vets that are not related in that regard. Another part is typically a larger down payment, and if they don't meet the county loan limit, one of the other caveats to this is that the lender, in some cases, and I can't speak for all lenders, I've just seen this with some lenders, they're willing to take a lesser guarantee in the short term until it meets seasoning, and then refinance a loan under a rate and term IRRRL to get the entire full guarantee for that. So if they didn't meet the median income, or I'm sorry, the county loan limit for, say, this property, and they had a partial guarantee, 6 months later, they were, you know, the interest rate was able to be reduced and they met seasoning requirements and recoup period, et cetera, and did that loan, they would get a full guarantee on an IRRRL at that point, even if it is in excess of the county loan limit. So I hope that addresses that question.
We have about 7 minutes left. Did you see another question you wanted to address that was in the chat? I wasn't able to look earlier.
Let's see here and make sure I get everybody here.
I want to add something to that too, to what Jayson said. The Blue Water Navy Act of 2020 also removed that loan limit, you know, for a veteran that has full entitlement.
Correct.
So yeah, if they qualify for, you know, like $1 million homes based on their income and their credit, then VA will guarantee 25% of that. So that was effective January 1st of 2020.
Someone had asked, let's see here. Betsy had asked, looking to use the Earl option, curious about that to get current VA loan even lower. Definitely possible. The interest, as long as it's a full basis point in many cases, and the recoup period and the seasoning requirements of 6 months or more is met, and the recoup of 36 months is met, a rate and term, there's a lot of lending institutions. Matter of fact, I know several lenders right off the bat, that's their entire portfolio is almost all streamlined
Yeah.
refinances. I mean, that's all they do is streamline refinances. So it's a very popular product in that regard. So I would recommend starting with who you bank with or who your mortgage is with, and then just if it's in order to do a streamlined refinance, so it must be a current VA loan. You can't come from a conventional to an Earl. It would have to be a pre-existing VA home loan product, and then conduct a rate and term.
A couple of questions about, making the PowerPoint available. I think that can be posted on the website, or
My understanding is that the recordings will be made available. I'm not sure about the PowerPoint, but if you have a point of contact for this conference that you want to email, you can make that request.
I think that might be a public relations thing. I know that these are approved from central office. So in order for us to even utilize them. So in many cases, I think that might be, we'll look into that. I'll look into that for you as well. But I'm pretty sure that we would not be able to just hand it out recently, but I'm sure that we can come up with something, and if perhaps maybe public relations can handle that.
At the very least, I have both your contact info. So any last questions you want to address that came through the chat before we end the session? We've got about 4 minutes left.
Sure, I do see 2 other questions here. Let me address the rehab, and then I'll go back to the other question about the survey. Is the VA rehab and renovation loan still available? So I'm trying to figure out the correct way to say this. So yes and no. The rehab is essentially a renovation and is nothing more than a HELOC. That terminology or that vernacular for rehab is case specific to the Native American Direct Loan Program. The NADL program is not the one aspect about that program is that cash out refinances are not a part of that program. So you can do rate and term, but you cannot cash out refinance. So what they have done is basically added to law the ability through policy and through regulation to provide a rehab type of loan, where in the same context they would essentially, if someone had an NADL loan, they would get with bids or get with contractors to conduct bids on whatever the renovation was going to be, such as new roof, maybe retrofitting the house, with electrical. There's a lot of aspects to it, and at that point they would submit it to the VA for this pre-existing NADL loan, and we would then adjust it to add value to the property and then reconduct the loan and close. If it's a non NADL loan, it would simply be a cash out refinance. You could simply take the equity and do whatever repairs or modifications to the property to improve it, if need be. Let's see here. There was one other question that I saw.
One. We have time for one last question.
I tried to do the survey on this loan session. It will not allow me to do this. It says already filled out, which is true, but it was for the earlier session. I want to make sure the survey shows that okay. I do apologize. You had some issues with the survey. I try to work through the technical issues, but we do apologize. But it seemed like we gave it plenty of time. It looks like 22 votes came in for the polling, so it looks fairly accurate to me.
Yeah, and there were some, and on the poll, there was also some people that may be joining through an application or device wouldn't allow them to do the polling. So that's a common concern sometimes.
No problem.
Any last content related questions we can address? We have about 2 or 3 minutes.
there was a comment in there that this is an outstanding program. So we appreciate your service and thank you for using it. I think somebody said in there that I am in the process of obtaining a home now and close May the 13th. Well, congratulations.
Yes, congratulations.
Okay, well, if there are no other questions, then any last closing thoughts from either of you before we go? No? Okay.
Don't we have any closing remarks? No,
Okay.
I appreciate everybody attending today, and always feel free to reach out to our regional office if you have any questions, or through the 1-800 number and va.gov. There's a lot of material on va.gov. I know it can be kind of cumbersome to navigate the systems there, but it's very informative. Everything is transparent. Everything's on the website, and then the details, should you need to, you can contact the 877 number. Any of the underwriters or loan specialists, or even myself in particular, can address those questions, or Mary Ann.